Hey everyone, Mr. Anderson here. I thought I'd give my take on Bitcoin's current price action. And of course, we are dumping again. And you would think that the fear and greed index would be dead as well, but it is not. It is still printing at 67. So I don't know if there's something wrong with that index, if they're not updating it, or people are still greedy and bullish. Looking at the monthly, we're currently printing what could be a bearish engulfing candle, which would indicate a trend reversal, and it negated last month's bullish price action. If you look back at the end of 2017, you can see that we had similar price action, and we had a trend reversal to the downside. Back in 2020, during the beginning of the COVID pandemic, we had a precipitous drop followed by a bullish engulfing candle, which indicated a trend reversal for the last cycle bull run. And then finally, we had another one at the end of 2022, which ended with last cycle and also was in conjunction with a whole bunch of scandals that included Celsius, Three Arrows, FTX, etc. So it would be logical to think that we're having a trend reversal here. The other thing that you'll notice is that these candles are different widths, and that is a beta that TradingView is using that incorporates volume into these candles. So you can see that the last two trend reversal indicators were low volume. So that's something to consider. If you dig deep into these trend reversals, you can see that with the end of 2017, it was the cycle peak. We dropped, had a higher high, a lower low, and then we dumped. For the beginning of 2020, we had a regular trend reversal, and then we started coming back to the downside. The pandemic hit. We had the economic reaction to that, and then a V-shaped recovery, and that's important to note for this specific instance. And the reason I say that is because if we do have an economic issue and the markets dump, the Fed is going to intervene, governments are going to intervene, our Treasury is going to intervene, and we're going to start printing money again. And then we look at the downturn for the last cycle in 2022. We had a dump, a rising wedge, a corresponding dump, consolidated, dumped again, bottomed out, and then the current bull cycle started. Looking at what the price action that we're currently in, we are in a area of consolidation between 56 or more like 60K to 72K. And we were forming this slight downward parallel channel, which is the flag, and it is still viable. However, recently we had the war in Israel, we had a bad GDP print, we had a bad PCE print, and we have indicators today of continuing inflation. And so we weren't able to retest that upper part of that parallel channel, which is the bull flag, and we hit this is a pocket of supply and resistance, and now we are below the 200 simple moving average and the 50 simple moving average, and testing the lower end of the parallel channel, which is in conjunction with the 100 simple moving average as well. If we break through that, the next level would most likely be the 52K area, which would probably correspond to the 200 simple moving average and the upper band of this parallel channel to the upside. So we're currently above that channel right now. If we were to dump back into it, we'd still be in a bull run, just not a parabolic one. So something to think about. Now, the other thing is that this does look like a Bart Simpson formation, and this was last cycle's first peak. We dumped, and then we had a period of reaccumulation, and then we shot back up to our second peak for that cycle. So we could be going through that as well. Now, we are still in a bull flag, and that's what this auto chart is identifying. However, within that formation, we have other patterns. We have a double top, a rising wedge that basically played out, got to 2/3 of the potential price target, a potential double bottom that is printing today. And when you put that all together, you have a slew of price targets to the upside and to the downside. And I think this is telling us that there's some indecision in the market, which would make sense because of the macroeconomic situation. However, we are at the beginning of the parabolic phase of Bitcoin's cycle for 2024. So I think a lot of investors are trying to figure out what they need to do here. And considering that the fear and greed index is still within greed, I think a lot of people are just holding while a lot of retail and leverage positions are getting wiped out. And once that is all completed, we may potentially decide which way we want to go from there. If we had our fib chart, you can see that price is corresponding to the normal fib levels. We're currently interacting with the 0.382 fib at 60K. It might be coming down a little bit below it, but I think price will probably end above it, and that would be a good sign. If we do punch through it, we got the 0.5 of 56K, which is the upper band of that parallel channel. Below that, we have the golden pocket at 0.618 and 0.65, and that corresponds to a demand level. So that would be a very normal place to retrace to, and I would be dollar cost averaging at that level. Below that, there's an area demand at 42K and the 0.786 at 46K. If we reverse our Fibonacci chart, we can get potential price levels to the upside, and that would correspond to the 2.0 at 108K, and that would be in confluence with the price target of the bull flag. So that's the optimum price target level. However, it would be normal to come up to about the 1.618, which is 95K. And so that'd be a more viable target if I was looking to the upside for the next few months. Now, I did put the auto Elliott chart on here, and of course, not everyone agrees with how it places its waves. However, it does correspond to the bull flag to the upside of 1.618, which is 113K, 93K, and 80K. So high probability of 80K versus the higher price targets if this is correct and we maintain its bull flag. I did do the 3-day chart because it did show downside risk. And they do correspond to the fib levels, demand levels, and simple moving averages, as well as the VVRP levels of point of control. So that is confluent, and if we do dump, those are the places that I would be dollar cost averaging in. Looking closer at the daily chart and our formation, you can see we punched through this area of demand. And it's not the first time that we did that throughout this last month. We did it back in early March, mid-March, and recently again in April, and we are retesting it again. This is the stochastics RSI and MFI, and as you can see, it has been on a steady momentum to the downside. And then we have the MACD, where we had the stem of our bull flag created, we diverged, and this downward momentum ended up with consolidation in price action. But we have had several instances where it looked like it was going to reverse, and we got the proverbial MACD FU. We had one here in the beginning of April, another one in mid-April, another one fairly recently at the end of April, and we are forming another one at the end of April. So it has been a nightmare, and I hope this slide gives you nightmares because it's going to give me nightmares. And it's been crappy trading. So I understand everyone's feelings on it. I feel the same way. It sucks. Looking at Market Cipher, we've had, again, it's telling you the same information as the regular stochastics and oscillators, and the momentum indicator as well. So we've had momentum waves to the upside. We've had divergence indicated by the red line, and we've had money flow slowly moving to the downside. So the last time it did move to the downside, it never turned red back here at the beginning of March. And I don't think it's going to turn red when it does trough out here. And if it does go red and it continues red, it means we have a larger problem at hand, and large whales are selling and they're not holding anymore. So that'll be very bearish. Looking at the 1 hour, you can see that the lagging span is free and clear on the Ichimoku. The baseline is over the conversion line. And if you are in a short, I would continue to stick out that short until the lagging span began to move towards price action, and then you might want to get out of your short. But other than that, there is no bullishness indicated here. Again, I'm looking at what happened back in early 2020 when it came to the pandemic. Again, if we do dump, especially on an election year, the Fed is going to come in and they're going to turn on the spigot and they're going to cut rates, and that'll be bullish for all assets. The other thing to consider is that we have only retraced really about 19% for this current retracement, if you want to be accurate, but it has been similar to the other retracements, which have been 21 to 20%, and we've had 4 of them prior to this retracement. So nothing really to panic about. If you're in small positions, I would hold. I am still holding. If you're in leverage trades, I would consider getting out of them because you really don't know how the flash crashes could occur. And I think that's what will occur. It'll be a flash crash followed by a V-shaped recovery as the Fed, Treasury, and government policy takes effect, and we enter probably another inflationary period. So that is my take on Bitcoin today. If you have any questions, or if I missed something, or you want to see another chart, please let me know and I will do that. I hope you have a great day. All right, thanks. Bye.